Hello, welcome to my channel where I give you educational information about life insurance. And if you like that type of information, be sure to like, subscribe, and comment. So today I'm going to discuss with you the truth about term life insurance. And in order to do that, we're going to talk about the pros and cons. So let's dive right into it. So, pros. Number one, it's affordable. Term insurance is affordable. So because it's pure insurance, you're paying a certain amount of dollars for premium for a certain amount of death benefit. It doesn't have anything else attached to it. It's pure insurance. And because it doesn't have any other bells and whistles or any savings or anything else attached to it, it is less expensive and a lot more affordable because you're not paying for those other stuff. Okay? So very affordable. Number two, you can get high coverage. And that ties into it being affordable. You can get high coverage. You do not have to be rich to get $1 million term policy. You don't have to be rich, okay? A healthy 25-year-old could probably get a term policy for $1 million. That's like $40 a month or something like that. So it's affordable, or between $40 and $50. So you can get high coverage. You're paying for a whole life. It costs a lot much more to get $1 million coverage. So you can get high coverage in a term insurance. The typical person, the everyday person, can get high coverage. All right, so next, it is renewable and convertible. What does that mean? That means renewable means that after the term is over, you can actually renew it and you don't have to reapply. Right? So let's say you had a 20-year term policy. After the 20 years, you didn't die, the policy's ended. You can renew that policy before it actually expires and continue to pay your premium at a different price though. So, but you can renew it. You don't have to reapply. It's convertible. What does that mean? That means that you can convert this term policy to a permanent policy, to like a whole life policy. So you decide that now I don't want term anymore. I want something that's going to be there for until I die, regardless of how long it is. If I live another 50 years, I want it to be there, right? So you can convert that to permanent, to whole life policy. Now there is an expiration to do that. So typically, like I use the example again for a 20-year, they usually give up to 18 years. But there is an expiration before the end of the policy that you have to go ahead and convert it, okay? So it's convertible. The other pro is that it's simple. Not hard to understand at all. Very simple. Doesn't come with a lot of attachments. There's riders. Yes, there's riders that could be easily explained that comes with it. But the basis of it is you pay X amount of dollars of premium, whether that's monthly, quarterly, semi-annually, or annually, and you get X amount of coverage of death benefit if you die within this particular term. That's it. Very simple. All right, so let's talk about the cons now. The cons, let's talk about the cons. Number one con is that it's temporary. Temporary. That means it doesn't last forever, right? So after the term, it's over. You no longer have any coverage. So if you don't exercise any of the options you have here, you have no more coverage, right? So that's a con. It's not forever. It's not until you die. It's only if you die within that term. And because of that reason, actually only 2% of term insurance policies are ever paid up because, number one, either the person doesn't die within that term or the policy got lapsed before the term was over, right? but 2% is still is still decent. It's not great, but it's decent for the what if factor. Okay, so there's a 2% chance that you can die in an accident or what have you. All right. So the next thing is that you have to start from scratch in terms of your payment. In terms of your payment, now everything that you've paid so far within that 20 years is gone. It's like you never paid it. It doesn't have any savings account to it. It doesn't have anything attached to it. You're paying, and if nothing happens, then you lost that money. All right? So you're starting from scratch with your payment, and now you have to continue pay at that particular age. So that's what I mean by starting from scratch. At that particular age. So what it costs during that time, let's say you were 25. Now you're 45. You have to pay for the 45-year-old now, not the 25. Even though at 25 you were paying the same amount for the whole time. Now you have to start from scratch with the payment, and nothing you paid for before you have anymore. Okay, that money is gone. So that's a con. All right. Next thing is that the cost when you're older. The older you get, the more it costs. So again, at that 45-year-old, they're going to cost more. If it runs out later on and you're 65 now, a lot more costs. So the older you get, the higher it costs. Number 4 con. Number 4 con, no savings. No savings attached to it. So any money that you're putting into it, it's not working for you to save up, or you're getting any interest credit or anything like that. That's not part of a term insurance. So that's the con. So one thing I want to discuss here. So if you have to start paying from scratch here, and you're not getting any savings, and all that money that you're putting into a term policy, then how does it being renewable and convertible really benefit me? How does that benefit me if I still have to pay more and I'm not getting any savings, and all that money that I'm putting into it, I'm renewing, but all that money doesn't help me. It doesn't help me continue the policy. I have to start paying more. That would be a good question to ask. And here's the answer. The answer is, you write it up here, GI. GI means guaranteed insurability. Okay? What does that mean? That means that you do not have to prove that you're insurable anymore. What does that mean? You don't have to take a test. You don't have to get samples, none of that. So if you were ill, let's say you had cancer, they couldn't deny you renewing your policy. So that's how it works in your benefit. So most of the time it's going to work in the company's benefit, yes, but where it can work in your benefit is that if you were ill and you decided, now I want to convert or I want to renew, and you can afford to do that, they can't tell you no. It's guaranteed insurability, even if you are ill or terminally ill. Hopefully that was helpful. Now, if you do want to see how life insurance would work for you, I'll leave a link where you can schedule a free consultation if you are currently in the market for looking for life insurance. Okay? Now be sure to subscribe if you haven't already done so, like the video, and hit the notification bell so whenever that I drop another video, you'll be one of the first to be notified. Until next time, talk to you soon.